Good morning, everybody. Hey, welcome to Thursday. This is Jobs Thursday, looking for unemployment numbers, first-time unemployment claims coming up this morning, as well as some earnings stuff coming up. I want to thank you for joining us. But before we kind of get hooked up with Dave here, I do want to remind you that we're seeing all kinds of volatility. The question is, how long is it going to last? I don't know. Nobody knows the answer to that question. So that makes it even more important to know how much risk you have in your current portfolio. If you don't know what your risk number is, how can you be prepared for a downward market turn we're seeing right now? Give us a call at 863-382-0037 to schedule your no obligation financial x-ray, where we'll help you look to see how much risk you really have in your current portfolio, and we'll look to see how much risk you can handle. Give us a call, 863-382-0037. And with that, good morning, Dave.
0.7. Good morning, all. It's 8:40 now. 20 before 9. Time to check in. See what the markets are doing to your money this morning. They weren't very nice to it yesterday. Let's see if we can turn the corner today with a little bit of good news out of the unemployment front. Check in with Phillip Statler from Statler Financial Services in downtown Sebring. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. I would say we've got some mixed news on the economic front, wouldn't you say?
Yeah, offhand, I think that'd be a way to put it, because we got some good news on the unemployment front. Let's start by setting the table, because it was a big move yesterday on Wall Street, and it was all to the red side. Dow was down almost 2%, but down 682 points yesterday. Standard & Poor's was off an even bigger percentage, down 89 points yesterday. And the NASDAQ took the cake, down 2 2/3%, down 358 points. And you and I comparing notes, near as we can figure, it was just the Wall Street mavens making a statement about not liking the inflation figures we got yesterday morning.
I'm thinking that's most likely what it is. We've been talking about inflation a lot the last week and a half or so. And just to give you some context, Dave, that puts the NASDAQ down almost 6% in the last 30 days. So they're down and down 4% the last 7 days. And so the S&P 500 is in the red for 30 days. Everything's in the red for the last 30 days. So it'll be a breath of fresh air if we can get some green ink today.
I hear you there. And now the time will tell whether this is going to be one of those little mini 5% adjustments, or whether it's heading toward 10% correction level, or heaven forbid worse. We'll find out as the days go on, because nobody knows for sure. One thing I did notice is that they aren't reacting as vociferously this morning to the producer inflation numbers, which was, well, not as bad a miss as the consumer numbers were, but still a miss. Producer prices up 0.6% last month. That's double what the market expected, and annualized up 6.2%, which is a measurable amount more than the market expected as well. So we had 2 more disappointments on inflation, but I'm not noticing the market having the catastrophic reaction they had yesterday for a few minutes.
No, it definitely not. But one of my ticker tapes said, hey, we're buying on the dip here when it comes to technology. So that's probably, I think, what's giving the NASDAQ a little bit of a boost this morning, is that, we've seen that dip in the big tech names, Apple, Amazon. And so people are coming in now and scooping them up at these, quote, discounted prices a little bit here. We'll have to see if that really plays out or not, and if it continues to be the case.
Little bottom fishing going on, in other words.
Yeah, exactly. So, because I think the numbers, they do indicate what you and I have been talking about, and that's inflation is here. And as much as the economists don't want us to focus on that, I got to say it's here. The question is, how high is it going to get, and how long is it going to stay?
Absolutely. And to modify the bad news that came out, one thing, while I was making fun of the Federal Reserve guys on the new talking head shows over the weekends, they do have a point that we're getting worse numbers than we actually should be measuring ourselves as having, because we are moving some really depressed prices months out of the average now as we get past following through March and April of last year when the world basically came to an end. Doesn't mean we don't have inflation. Anybody who's gone grocery shopping knows that. But these numbers are kind of being amplified a little bit by just the science of mathematics.
Oh, that's true. I mean, because we're looking at, quarter over quarter, and we're looking at year over year. And so, yeah, this time last year, things didn't look quite so rosy.
Oh, yeah, people were dropping prices on anything just to move them because nobody was around to buy them. It was really terrible at this time last year. Now we start out with the good news, and that's on the unemployment front. First-time claims, the usual thing that we check every Thursday morning. Actually, a pleasant surprise and a new pandemic low, 473,000 first-time claims. Not where you want to be, but at the very least, it's an improvement and going in the right direction and a little bit better than the markets expected.
It was a little bit better than the markets expected. I did notice that they also revised last week's up a little bit more because it was below 500,000. Now it's above 500,000 for last week. So they revised it up. And then this week, we've got about a 25,000 less than expected number. So that's a good sign.
They'll take it happily. Of continuing claims, for what it's worth, almost right on the number. The market was expecting 3.65 million continuing claims. We got a report of 3.66 million, which you kind of look at and say, okay, that's into margin of error when you take it across the entire country. I got to assume that's exciting nobody.
Well, yeah, I mean the number's so big that's not even relevant, and it's down from last week, so that's good too.
Absolutely. Going in the right direction helps. And so far, at the very least, I'm not seeing any monster moves on the indexes. Anything from the companies reporting during earnings season that we ought to know about?
We do have a couple. Some of them not necessarily household names, but interesting companies nonetheless. We have a company called Vroom. And, they are a used car platform. So they sell used cars online. And I got to think that would be tough, but they had a really good quarter. They beat on top line, beat on bottom line, because demand, as the chip thing continues to be an issue for new cars, that means the demand for used cars has gone up even more. So they've really had Vroom right up there. They're up almost 13% this morning.
Cool. It is a good time to be a used car dealer if you can get a hold of stock.
Exactly. I mean, I know that, they're giving you premium trade-ins now because they need that used car to sell because their inventory is just so limited on the new car side.
Absolutely.
So talking about kind of tech companies, we got Sonos. They're the speaker company, and they have the website. You can, wireless type stuff. They did okay. They earned 12 cents a quarter. They were expected to lose 22 cents a quarter. So that was a pretty nice swing for them. They also raised their full year sales guidance. So good thing for them. They are benefiting from that also, up 14.3% today.
Glad to hear that.
So we got some big numbers moving through there. Alibaba, now I don't have any price change for them, but they fell short of their forecast on the bottom line.
Really?
Yep, they did. They had but they had a better than expected revenue number. So they, it's one of those mixed bags. We'll have to see how they kind of trade out because they're traded on the Hong Kong exchange. And I guess this may be a live quote. It actually has them down 3% today.
Now that would be the close in the Hong Kong exchange.
Okay.
They closed at 6 a.m. But yeah, I've never followed Alibaba enough to know where their customer base is. It's obviously worldwide by the fact that it operates out of China, but it's always something that's kind of a bellwether for our e-commerce stocks.
It is. That's right, because it is e-commerce. I equate it to kind of an Amazon, but we'll continue to watch them. Then I had a company called Casper Sleep. I know we've talked about them before, but they manufacture mattresses and other bedding products. They had a smaller than expected loss for the quarter, and then their revenue actually was better than expected. So kind of a mixed bag there, but they came out and raised their full year outlook because of something they call favorable trade trends. Not sure exactly what that is, but it's helping their stock today. You got to be happy. Up 6.7% today.
Cool. Good to have good news on the individual issues while we're going on the economic.
Exactly.
One more tidbit before we summarize the marketplace. You told me when we first went on the air, and we had both got a giggle off of this. Tesla said, "Oops, changed our mind. We aren't going to take Bitcoin anymore to buy a car from Tesla." Right about the time it's crashing.
Exactly. So when it's going up, it's good, but when it's going down, I don't want to use it.
Yeah, all of a sudden the losses mount. Markets, once again, it was off just across the board and pretty big yesterday. 45 minutes before we opened today, Philip, what do things look like?
Today, we are actually getting some green ink on the stock exchange today. Some not by much, but the Dow 30, I guess we could say, is kind of even right now. Really, it's up $18, but it's green. The S&P 500 is up 1/3%. The Nasdaq's up about 0.8, and then the Russell 2000, which we look at periodically, is up 0.7%. So some good signs there for them. The commodities are all in the red today, Dave. We've got silver down a little over 0.8%, but still over 27. Gold is down 1/4%, and then crude oil continues to slip today, down 2.2% at $64.60. And maybe that's because the pipeline is supposed to be up and running by tomorrow.
Yep, pipeline is actually up and running now, but the stuff only goes through the pipeline at like 5 miles an hour, so it's going to be a while before our shortfalls end. Overseas markets, everybody was red ink after what we did yesterday. The Asian Rim market was down between 1 and 2.5% in some of the markets. Europe is looking at us and going, what are these clowns doing? They're off fractionally as well halfway through their day. Philip, need advice to make sure retirement happens on schedule and on budget? That's what you're there for. How do I find you to get a read on where I'm at?
Dave, then give us a call at 863-382-0037. Let's face it, with all the volatility we're seeing right now, risk is vitally important that you know how much risk you have in your portfolio. So give us a call to find out what that number is for you. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And one more time for the week, tomorrow morning, same time here on Light. Philip, thank you so much. I appreciate it. Have a good day.
All right, man. You have a great one, too.
Be well, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, as we wind down the show today, hey, let's connect. There's several ways we can do that. You can go to our Facebook page under Statler Financial Services. You can go to our website, statlerfinancial.com. You can also listen to us every day, Monday through Friday on Light 105.7, and then catch us this weekend on the weekends for our radio show on WWTK 7:30 a.m. But let's connect. We want to be here as a resource for you, your family, and our community. Have a great day, and I look forward to speaking to you again tomorrow. Bye now.